This is your LMAX Exchange technical update for Monday, November 13th, 2017. Euro dollar. So the euro has been consolidating over the past several sessions. The market did break down last week to a multi-day low, but mostly after the dip, the market was quick to get back into the consolidation. And so we've mostly been in this consolidation roughly between 115.50 and 16.90. And so the market's going to need to break this consolidation for clearer directional insight. If we do see a daily close back above 16.90, it will take the immediate pressure off the downside and put the market back into a more neutral to slightly bearish outlook following the break of this major head and shoulders top. Ultimately, it would take a push back above 118.80, the right shoulder of that head and shoulders top, to suggest that the market is ready to resume a more intense uptrend in 2017. Until then, even if we do break above 16.90, there is still risk for the market to stall out for a lower top and continuation of declines. If, on the other hand, the market is unable to establish a close back above 16.90, it will leave the immediate pressure on the downside for that next big drop below that recent low that we saw last week around 15.55, and then putting the focus again on that pattern objective from the major head and shoulders top, which comes in down around 112.30. Sterling dollar. So for cable, it's been a big consolidation over the past several days, with the market confined to a range trade between 130.25 and to the top side we're looking at 133.40 about. And so it's going to take a break of this range for clearer directional insight on a short-term basis. But medium term, if we do break down below the bottom of the range, it should be very well supported on dips into what has been now significant support in the 127s at 27.75. That's the level we had broken out from earlier this year back in April to suggest that the market could be putting in a longer term bottom. So setbacks should be limited even if we do see a break below 130, while a push back above that recent high that we saw at 33.40 about will open the door for the next major upside extension and a continuation of this recovery in the pound in 2017 back towards initially the 2017 high up around 136.60 and then beyond there towards the psychological barrier at 140. Dollar yen. So dollar yen has been playing a range for the most part in 2017, and so this latest topside failure here, as the market is showing signs of rolling over, suggests that we could see a resumption of declines and a resumption of this range trade. Look for a daily close back below 112.95, the low that we'd seen back on the 31st of October, to strengthen this outlook, while a break below the low going back to the 16th of October at 111.65 would do a good job to really ensure that this market could be on the verge of accelerating to the downside back towards the range lows down in the 107s. Euro Swiss, not much changing with Euro Swiss. Overall, the structure here is quite constructive in 2017 following a break of 110 and then 112, and now the focus is on that next big push towards that previous major psychological barrier and support at 120 going back to January of 2015 before that was broken. Any setbacks here should be well supported on dips, ideally into the 114 area. Only a break back below 112 would compromise this constructive outlook for Euro Swiss. Aussie dollar. So Aussie has been consolidating over the past several sessions. It looks to be a bearish consolidation, and the market could be getting ready for the next major downside extension here in towards the 75 barrier. If we do see the market turn up, that's fine as far as the current structure is, which favors the downside. It would be viewed as a correction for a lower top, ideally in the 78 area, ahead of a resumption of declines. Only back above 79 at this point would force a shift in the structure and suggest that the market is looking to move higher again. Dollar CAD. So dollar CAD has entered a period of correction over the past several weeks out from those plus 2-year lows that were seen just ahead of 120, and now it looks like this correction could extend some more, and so this latest pullback that we're seeing should find some support, ideally in the 126 area, a previous resistance now turned support zone for a higher low and extension back to the top side towards the next key psychological barrier here at 130. Ultimately, only back below 124 in this market would compromise this outlook, which favors continued upside now. Kiwi dollar. The New Zealand dollar has seen a nice little bounce after matching the 2017 low from back in May at 68.18. The market could continue higher, but any rallies now here are seen corrective with a push towards the 71 area, ideally well capped in favor of the next downside extension below 68 and towards 65 further down. With this market, only push back above 72 would compromise this bearish outlook. SPX 500. Not much going on with the S&P 500 as far as change goes. The market has continued to push to record highs, seemingly on a daily basis, but we did see a little bit of a pullback in the previous week, which could warn of the onset of a well overdue correction that's been waiting for quite some time, with medium-term studies quite extended. Medium meaning the monthly, the daily, the weekly, and the monthly charts have been calling and screaming out for a correction, a pullback, but we have yet to see anything. We believe that a break back below at a minimum and a close below on a daily basis, that support which comes in around the 25th of October low at 25.44 would be required to just take the pressure off the top side and maybe then set the stage for something more significant. But right now, until then, the market is expected, and we can't rule out the possibility of a continuation of record highs. Gold. So gold has seen some choppy trade over the past several months, but ultimately a market that has been supported and looking to move higher. Most recently a 2017 high back in September at 1357 about. And so setbacks here are continued to be expected to be well supported, ideally ahead of 1250, in favor of the next upside extension back towards that 1357 2017 high from September, exposing then a push towards and through the 2016 peak at 1375 further up. Only back below 1200 here would compromise the constructive outlook for gold.